stop trading. I don't really see that as a thing. So if your setup is good, you have a good strategy, you stop trading after your first loss, what about the next trade that comes 4 hours later? You've just missed out on profits because of a silly rule you put in place. But anyway, guys, that's it from me. Chris Pulver is here to take over the show, so please don't leave when I leave. I'll see you guys later. I'm not sure if I'm on for the rest of the week. I'm not sure. But if not, then I'll see you next week, or I might see you later this week. It'll be a surprise. Guys, see you later. Thank you for having me. As always, you've been great. Have a good day.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Wednesday. Happy CPI party day. Here is the market for the day. So we have some gaps all over the place. We got some green across the board. Let's take a look at the heat map. Everything but green. We got 80% of stocks advancing today, led by everything. So market's all excited about some CPI data, which I thought was interesting that it's not all perfect, but here is the trade. Now, what I think is something to watch for. Take a look at the SPX. Okay, technically speaking, this makes sense to me that, yes, we did have a really nice gap today and prices pushing up and everybody's all excited, right? 2% plus on the Nasdaq, 1.77 on the SPY, Dow's up 1.6, Russell's up, I think, over 2% right now. Russell's up 2 1/3. So, I mean, we got green across the board, 80% of the stocks advancing. It's a nice little broad market rip. But I will say this. The bulls are making a nice little comeback trade today, but they are facing some resistance that is right ahead of them. So I could see this market having a little bit of momentum to the upside, maybe getting back to the 6,000 handle. And I would say, if you're taking notes here, write down 6,000, because if the SPX goes to 6,000 but gets rejected, then we come back and fill the gap, and there's all sorts of pressure that returns. Right? And this is nothing more than a little bit of a pop to the upside as the market fades it back down, fills the gap, and then possibly hit some fresh lows with this 144 to 200 moving average that we've still been waiting to get hit. It's over 300 bars. It makes sense we'd have a little correction. I would much rather see a correction that is like an orderly correction like we're getting now, although traders kind of hate watching this happen because it feels like paint drying or a lot of volatility, right? But if this were to happen, I would much rather, build positions off of a nice bull pattern off the 200 moving average after it's been checked off, and then see if we can get back to the highs. That's not how the market's going to move, though. Like, it's going to do whatever it's going to do, right? So if we come up here to 6,000 and we break above 6,000, any type of pullback here, I would say, has more legs to the upside. My concern is that we poke the 6,000 and then we reject the 6,000. And if that happens, there's obviously a gap fill from today that could be filled right away, right? So let me go to a slightly higher time frame here in the 15-minute. This is a good look at the last couple of weeks of trading, and that would be my kind of channel look. All right, we did have the S&P did fill the election gap, the Dow filled the election gap, the Russell filled the election gap, and then some. So with this election gap offering some support, and obviously have the follow through today on S&P on the CPI news. I see we could have some follow through. We come to this area. If this is a rejection, then we're going to have a gap fill maybe in the next few days. Even if we come back to SPX at 60.50, 60.50 here, it looks better, right? It looks better than 6,000, but it's still the same holiday high that was showing some resistance right off the FOMC breakdown in the 18th. So just some technical stuff there. We'll see. Now let's get into the actual numbers, because like I said, I don't think that people are looking at this and saying everything's great. Here's what I see. Look at that. Here's the Fed watch tool. Look at the probabilities. Nothing has changed on the Fed watch tool. Okay, we're still at like a 97% chance that nothing's going to change. It's going to be a pause in January at the end of the month. We're going to have core PC at the end of the month as well. Probabilities here have not changed. The market is looking at maybe one rate cut for 2025, and it would be June. According to this probability right now with the Fed watch tool, June would be our one rate cut, and that's it. So the Fed is mostly neutral. I wouldn't say hawkish necessarily because they're not talking about raising rates, right? Fed is definitely not talking about raising rates, although they will say it's not off the table. They're not going to really give you anything to defend it. It's right. It's interesting. The Fed is so transparent, yet they're not. Like they're so vague that they can say two things, like we will or we won't, or we can and we can't, or we might and we might not. But at the same time, they drip so much information with this tool that we look at every single week or every single day or whatever. But there's no major changes. So the market came into this year thinking maybe 1 to 2 cuts. It looks like pretty definitively right now, one cut. And that's not coming until June. So the first half this year, the Fed is pretty much doing nothing and just letting the data come in. If they need to do anything else as far as monetary policy, then it's subject to change. Would the Fed cut more aggressively? I think they'd be stupid to cut more aggressively. I really do. Like Trump might want more aggressive cuts and you might want to drive things lower. But if this isn't shifting, if this watch tool is not shifting, or if the yields itself are not shifting, I would be a little bit on the cautious side that the Fed is not going to do anything other than hold and make sure that data comes in as expected, be a little bit restrictive. But let's take a look at the actual numbers. Here's a Bloomberg economic calendar this morning, and here we go. 8:30 a.m. news. Here's a nice little chunk on CPI data. So we did have a decent news yesterday on producer price index, but for today I thought it was interesting that we had a previous print on CPI at 3.3, came in forecast at 3.3 going into today, and it came in 3.2. So that actually was a lower than previous and lower than expected. Okay, good. That's core CPI year over year. We had a previous print for the month over month. This is core CPI. Previous print was 0.3, forecasted 0.3, came in 0.2. That was slightly better as well. It still shows there's inflation. It still shows things are higher. It's just, okay, so it's less than expected, less than forecast. The core CPI index, previous print was 322.66. It was forecasted at 323.40, came in 323.38. Barely a beat, but I'm going to say this. It was a lower than forecast, but higher than previous. All right, so we'll say that that's a mix. It's a bit of a wash. CPI year over year, previous print was 2.7, forecasted 2.9, came in 2.9. That is higher than previous, and it is equal to or I should put it this way: is equal to forecast, and higher than previous. That's probably not a good thing. 0.3 previous, forecasted 0.4, came in 0.4, so that is higher than previous and equal to forecast. 315.49, 315.61. So that is higher than previous and 1/100th less. 1/100th less. And then CPI index, there's no forecast there month over month. So I look at it this way. I don't see this as like it's all awesome news. I mean, I think the market headline wise is all excited about this right here, but it's still higher. Are we anywhere close to 2% right now? Are we anywhere close to 2%? Not even close. Okay. Now, to take this one step further, let's go to this third party inflation reading. This goes back to last year. Okay. This was a lot of progress on inflation. This is not progress on inflation. This is now chop inflation. We are still sticky and elevated around that 3% handle. Now, if the Fed in reality, and they'll never say it, they will never ever say it, okay? But the Fed is realistically accepting this 2.5 to 3% inflation window. That's what they're willing to say. They're not willing to say it. They're willing to accept it because clearly, when we got down to low twos, they're starting to cut rates, and all of a sudden we started to see a bottom in inflation. Inflation goes higher. Here we are back up towards 3+%. So if the Fed is now restrictive, they're hoping, I'm pretty sure they're hoping, that inflation will start to trend lower again. And so maybe this is what inflation looks like. And this would be a good situation if we have, if we have inflation and it goes lower, that's probably a sigh of relief from the Fed. The concern is that this is just a matter of time before things get more expensive. And nobody knows what it's going to look like when we start putting in tariffs. Nobody knows the full, information about who's going to pay what. Is it the U.S.? Is it U.S. importers? Is it U.S. exporters? Is it U.S. related? Is it U.S. trading partners? Is it the big enemies we have? Are we putting tariffs on China and Russia and sanctions? I don't know. But if there's any added friction in the global economy, it's going to be more expensive. And this is a big question mark of where we go. Higher inflation is going to put a lot of strain on growth and a lot of strain on the consumer and a lot of strain on the global economy. So anyway, I think it's a great little pop for the day. But am I a little cautious? Sure, of course. Would it make sense that we could, have this be all exciting and then fade? Yep, it can be. So I did put on a trade this morning. I'll update this in my Pulver alerts. I put on a 590 by 570 bear put spread, and it's a trade that cost me $5. So it cost me $5 for the potential to pay out $20. That's good. So I'm paying $5 to make 20. So my net profit would be, if I pay 5 to go after 20, okay, my net profit could be $15, which is a pretty good return on capital. Okay. Now, realistically, if I take the $5 and turn it into, let's say, $1,000 profit, where I can close this thing out for like a $15 winner or a $10, even a $10 winner, I'd be happy with. So I'll update that. I did the 590 on the SPY by 570, and I could have gone down to 565. It would have cost me an extra 70 cents, which, if you think about that, that costs very little to make another $5 of profit. But I just thought it's cheap enough. $5. It's like 0.16% risk on the trade. If price goes higher, then I'm going to sacrifice that $500 trade. If price is doing what I think we might be looking at here, and everyone is all excited, and I hate to rain on your parade here, but I wouldn't be surprised if this market has a little bit of drift here and then starts to fade off of some technical resistance. Like, I don't think the problems are solved. I don't think that technically we pulled back enough. I'm less bullish. If this market gets to all-time highs, I am less bullish. Okay. If this market is going to still respond to this channel, if this market responds to this channel, and even if it's this way and it's this way, and it's going to be this slow, agonizing, like, we're only down like, 8%, but it feels like it's an eternity to get any type of meaningful correction, you should still be thankful that it's not like this nasty, like, fall off a cliff feeling, because that's way more difficult to trade. It's nice if you have cash to deploy at the bottoms, but it is way more difficult to get liquidity. The markets are crazy. It's good to sell premium, but man, it's a wild, wild move, right? So point is, if we're dealing with a correctional phase, okay, there's a lot of resistance ahead. The market could reject right there. The market could have a fake out and reject right there. The market could come back to the holiday highs here and fade again. So I just wouldn't get all excited to think all-time highs are around the corner, because they probably aren't. Right? Does that mean I'm a bear? No. It just means that I think this market is going to struggle to get a lot of momentum to the upside. This inflation data today, even the inflation data yesterday, and even PC at the end of the month, the Fed's not doing anything, right? If it was all solved, then the Fed's like, oh, we're going to cut rates. Inflation looks great. It doesn't. Inflation has ripped pretty high the last 3 months. Okay. Is it reasonable to think that it'll take 2 years? I mean, I don't know. Is anybody trading 2 years from now? If you've got a long-term horizon, the market right now is not, they don't care about 2 years. Okay. The market is like, what's happening over the next 30 to 60 days? What's happening this quarter? Sure. If the Fed is lucky, we'll have inflation down into the low twos, but honestly, we probably won't. I think the new normal is we're probably going to operate between 2 and 2.5% if the Fed's lucky. To get inflation back down to the low twos or sub 2, we probably have to have a recession. We probably have to have a reality check. Just because it's like the cleansing and the purging that the market needs, the economy needs, to then kind of rebuild, a solid foundation and then grow from it again. But we're sitting at like these bubbly levels where I don't know how we can just keep operating thinking that things are going to get better. Boom, just got some profit. That was good. That was a little SPX trade on some profit. Nice. Okay, let's see what else. That's SPX. So any questions on that right now? See, I mean, it's a pretty clean channel, so I just wouldn't get overly excited about today's news. And look at the futures market. So if the S&P futures market comes back into this area, then I could see the big news candle forming a bit of a top and maybe gets faded. So I don't know, just buckle up. I think the market's all excited, but just be careful. Just be careful. All right, that's that. Let's go NDX or Qs. Looks like the same thing. I would just put a trend line kind of like that. And I just want to see, if price responds to it. So for the market to get all excited today, that's cool, but I could see us facing some resistance ahead. So in the 520 area for the Nasdaq or the QQQ, or let's put a chart here as well. I can get rid of. Let's get rid of that trend line. Let's go here. Okay, so if the NDX comes up to around 21, I'd say 21,350 to 21,400, potential rejection spot. Okay, just watch for the fake outs. We come up here, we fake out, we get a reversal candle, and it's just there's such an obvious gap to fill today that's my big concern is that it's so big. Like that's a 1+% gap. It's a monster move, and that's rare. You don't see a lot of that happening. So that move was a 1.08% gap on the S&P. That's a big gap. So a lot of times it's there for the bears might be licking their chops to find it. Here's Qs. Move this over here. Okay, so we'll see what happens. The Nasdaq has still not filled. It's close because we nearly filled it right after the election, but we have technically still not filled the election gap, which is over around 492. So do we have the market coming up here for resistance? Then we have a bear gap to fill, and if it fills that bear gap with any momentum, we make some fresh lows. Is it possible that this gap on the Nasdaq still gets filled, and we just have more of a correctional channel? If everything kind of bases around the election gap, okay, fine. If this is a measured move, which we have the election gap here, and then we have a measured move here, like I'll just be watching, but just thinking about trading through it. I'm not crazy bullish. I mean, the portfolio's up a lot today. I was up 35 grand this morning. Now it's up 41. I mean, I've got some big swings in the account today, which is nice. But I'm also adding a hedge, protecting some profit. If I see some good stuff, I might do a quick roll on a couple of positions. My income trades, anybody that's been following the Pulver alerts, and we've been taking those 111s, those are looking really, really good just because they're income based. With the pop to the upside today, that just kind of helps positions look better for profit, and it gets it further away from like the 111s. Any ratio spreads, same thing, like just the credits start looking good for those income trades. Okay, here's the Dow. Let me go back to this chart here. So SPX, watch for potential follow through. Let's go to the Dow today. DIA, big gap to the upside. I still think this gets filled. We still have a nice bar count on the Dow, so I'm gonna wait. I mean, if we fill this gap or we fall back into the 200 moving average, then I'll look to probably accumulate some DIA or some Dow. Russell, we had a nice pop off of the 200 moving average, but I mean, would anybody be surprised if this fills? I could see this. We have a nice little flush down on the Russell. We came up here, we flush lower the 200. We pop up here in CPI data. If we hold here, then there could be a nice reversal pattern to be bullish on Russell or bullish on the small caps. I want to see price breaking above there. But we've got to show that price is going to hold there. My concern is that we fill this gap and we fade. If we break the lows, we're just heading lower. But I could see this as a little bullish pattern, a little accumulation in here, and then if the bulls can break this neckline, I didn't draw that very well. If the bulls break this neckline, then we have some recovery on the Russell. Maybe small caps do get a nice rotation this year. Okay. All right. Let's go VIX. VIX down hard on the day with that big gap. Not a big surprise either. Market goes up high, VIX goes down. SVXY, well, I wanted more of a correction. We might get it. I might still get my correction that I want in the SVXY. Dollar index still hasn't broken a previous low. I know there's a lot of traders that are probably feeling stuck on the dollar pairs because they've been shorting the dollar. That's not been the play. My dollar Swiss hit profit. Is my dollar CAD hitting profit yet? Just got to check. Nope, not yet. Son of a gun. I'll wait for it. Dollar index. I'd said this. We just came into a nice little pocket level. If we do take out these lows on the dollar, there may be a bit of a correction here. But as long as we stay above 105.50 or 106.00, I think the dollar is just a correction and there's more dollar strength. Okay. Now, this is going to be a lot of, I'll pay attention to the dollar, right? If we take out this level, look for a little swing trade. I wouldn't necessarily be short on that. It'd be more like if we can buy this thing, we could buy dollar, tighter stop losses, and then see if we get back to the highs. If we break that trend line, we might be making new highs in the dollar. Again, if the dollar's getting stronger, that's probably bad for equities, possibly bad for gold, just bad for risk appetite in general, right? So dollar strength is not going to be great for equities going up all year. Okay. But dollar index is not done. This hasn't really changed or broken any major structure. This is not the spot that I would say the top is in on the dollar. If we were back here, then I would say I'm way more interested in looking and calling a top on the dollar, looking for price confirmation to take a macro position. Nothing yet. Okay. All right. Oil at 78, still hanging nicely above that 200 moving average. Look, it could be a bull flag on oil. We've had a nice little rip and it was a fake out right there, but we did proceed to go higher. That's a nice little squeeze. And we took out a previous high. This is the first time oil's done this in months. So this was like August, right? August fake out and then October fake out. And then here we have that big bull candle right there. So it's a nice little squeeze on oil. If there's a bull flag here, so up, a little bit of pausing, that's a bull flag that could have some more momentum. This is another reason I wouldn't get excited about this victory lap in inflation, because if oil prices go up, that means energy prices go up. The things that are expensive right now in the US, it's shelter. Shelter is probably the stickiest component of inflation right now. And if energy prices start to add to it, we're back in the same boat with like inflation is sticky. And here's all these different factors of why. So I don't know, a bull flag. I'm not bullish on oil. The trades that I wanted were down here. Those paid out. I'm pretty much just waiting to see like how ugly it gets. I am long on natural gas though, and I don't know if that's going to be the better trade or the worst trade, but we'll find out. Either way, I think oil has room to keep drifting. I would still say oil, even from this level, oil would possibly be capped around the high 80s to low 90s. I don't think oil is going to $100+ a barrel. I think oil at best would maybe get into like 88 to 92, and there'd still be a way to sell oil. And that's probably what I'll do. I mean, right now, look, this was really strong support that I bought from. This to me is reasonable resistance. I would say from this area here is reasonable resistance. So in the middle, I don't really care what oil does. I mean, and I don't think I could get a good enough trade to say I'm going to sell oil above and below and just do a mid trade, right? Like I could do a strangle trade. I can do an iron condor. I don't love that trade either, because I'm gonna collect like 10 or 20 cents on the dollar. However, I could look at a favorable reward to risk up here, and I could look at a favorable reward to risk down here. In the middle, though, I'm probably just going to stay out of it. Okay, USO also going higher. There's CL for oil futures, same thing. We'll watch those levels. Natural gas at $4. So we're not quite making fresh highs, but it is trending the right direction. I will give natural gas some credit with if this is a head and shoulders pattern and we are breaking that level, like we do have room to come back into the $5 zone. If this is the start of a trend and the first time in a while we've been above a moving average, that's why I put a position on UNG. If we are getting above this 200 moving average for the first time in a while, then I'm looking to go long. And I've got it's a diagonal spread. So I bought the 5, selling the 23, and my break even's around $16. So I'm trying to make $7 or $8 a contract by April. Now, if I don't get the April trade to pay me, I'm just gonna put another trade in, and just kind of keep lowering my debit. Gold. Everyone wants to know what gold's going to do. I'd say just be patient. That's my MO on gold, because we are still making some higher lows, but we're still struggling to make higher highs. So I think this is a choppy environment on gold, where we may still have a high, low, lower high, lower low to come. How does gold get weaker? If gold gets weaker, and I'm not short on gold, okay, I'm looking to buy gold down here. How does gold get weaker? By dollar getting stronger. If dollar index goes up, then I could see gold heading down. Okay. The one thing that's been interesting about the start of this year is that, gold has maintained a bid while the dollar's also been getting stronger, and that's an odd correlation. But it is what it is. So does something break eventually? Maybe. If the dollar gets stronger, gold gets weaker. Gold is probably going to be one instrument that is bid pretty well, based on central bank buying. China's been one central bank. Look, think of it this way: who's buying gold? Okay, the most aggressive buyers are going to be BRICS. Everyone that hates the U.S. is buying gold. Okay, the more optimistic view of dollar alternatives would be Bitcoin. And I say optimistic because like everybody's a little bit more excited about Bitcoin, but your major adversaries are just gold. Russia's going to buy gold, China's going to buy gold. This is Brazil, Russia, India, China, plural. I think. I don't know if S has a country to it. So anyway, we'll see. But I'm patient on gold. If we come back to 25 or 2400, I'm looking to accumulate some more. I'm going to stay out of futures for right now in gold. I did put an SI futures on for silver. Here's my silver trade. I like silver a lot, actually. It's one of my favorite technical plays, as far as just it's not a stock, obviously. It's less correlated to the equities market. But if we are getting silver to perform pretty well, I'd like to see this as a bullish pattern. I'm trying to accumulate some more in here and then push up to my big price target around 35.88. And then my other one is up in the 40s. But I want reason to add to my silver positions. I did put on a trade on SLV. I did a diagonal spread, so I went deep in the money. I bought a $15 long call, and I'm selling the 34. My debit is around 28.90, or my debit was 13.90. Break even's 28.90. So if I get it called away at $34, I'm going to make about $5.10 a share. So I have 5 and 10 contracts on that respectively. So it should be a good chunk of profit. But I went out to 2027. Silver is a good play for me. I'm willing to go a little bit more long term on it. Okay, Bitcoin back up towards 100 grand. Cool. Honestly though, it's fine. Like Bitcoin's up, position's fine. I've got some credit spreads, all that good stuff, but I'm still not convinced we're going like gangbusters bullish. And so I will be patient. I just look, here's an easy way to think about it. If I can draw a trend line on my indexes, I could draw a trend line on Bitcoin too. So here's another spot to watch for rejection. If Bitcoin comes up to the same high and then rejects, we're still in a channel, and it's still potentially a corrective channel. Okay. So I'll draw a trend line here, connect the dots, until price proves that it wants to break this trend line and hold above that trend line, I think we have a bit of a correctional channel. So, maybe call me old fashioned here, but that's where price would have to, get above it and hold above it. And also this goes back to the holiday chop we dealt with too. Is anybody surprised here that we filled the election gap and we end up closing back inside this range? Like this is a giant question mark. Nobody knows where price wants to go. Can we justify gains, or are we going to give it all back? Nobody knows. So this is a lot of volatility. And this is why I said, as we came into the end of 2024, I think we should be ready for a grindy 2025. It's going to be an interesting, choppy year. Why? Because we're sitting here at like crazy high valuations with a narrow, no market breadth, like highly concentrated stock market that, historically speaking, is unsustainable. Doesn't mean we have to give back a bunch of gains. It just means that maybe a normal phase of like the market can't go necessarily higher. That's what we have to figure out. So that's what I'm watching. Okay. All right. What else? We did Bitcoin. Watch and see if that trend line will break. Otherwise, I think it's going to be rejection. That's a long wick. It didn't. I mean, it was a 38% pullback. If Bitcoin comes back to the tops again, I could see us coming back down to retest the lows. And this, I will change my outlook here. If we hit the highs at 107 or 108, then I would say this is better support to buy from, as opposed to what I've been looking for around 80K. I want to buy in at, like, I measured 87, I measured 79. I'm looking at those levels for my personal add-in spots to find some of this balance here. But if we hit the highs again, I'm just going to change it from, okay, this channel, right, to more of this channel. It would be more of a sideways move, which is still totally fine. And this is a bull market with a correction, and there's opportunities to buy low. And eventually, if that breaks the highs, then we've got new highs to go. But I'll shift the structure if that's what I'm seeing in price. Okay, micro strategy up to 359. I could probably do a roll on this today, and I might. I just want to see if it's worth. If I roll it, it's got to be worth, like, 250 to 500 bucks. If it's not worth that, then I probably won't touch it. So in order to roll it, I probably have to go out farther, maybe roll my put down and my call up, and that allows me to accept the credit that I want. But I'll take a look at that one. Nvidia, same thing. Nvidia, I've got a call at 140. SPY trading at 591. Actually, I do want to do a quick roll on this one. I've got a collar trade in this account right here. Let me go to my SPY really quickly. SPY, there's my 100 shares. And my, let's see, that one. What is this? This is next Friday. Hang on. I don't think I can get this out for 90 cents, but I'm going to try. 90. It's not bad. Close out for a small loss next Friday, 605. That's outside the expected move, so that's why I'm closing it. I have about a 5 or 6% chance of profit on that trade. Now, I do have some shares. I do have a collar trade. There's my 590 call. There's my 570 put. Let me see if I can do a roll on this one. So I'm going to see if I can roll this out a couple of weeks. So let me do a quick roll. So I can keep the same strikes, get 81 cents credit, which is okay. I'm going to try to roll let me flip this option chain. So let me try to roll this up and this down, and also go out a little bit farther. So if I roll it up by a couple of dollars, down, maybe I'll do this. Well, let me just go back to the same strike. So if I go 590 by 570, okay, so I get 80 cents on a roll just going out in time. Now let me see if I go further out, get $1.50, get $2, and get 268. Go out to the first part of March. Okay, now, like, that's not bad. I can go out to March. Well, that's a big jump. I'm gonna save that. So I get 270. Let me see if I can roll this down one strike and up a strike. Up a strike, down a strike. So now I can roll this up to 592. Choices. I'm just looking at where I have a break even here. My break even is right around 588. So I'm trying to roll it up to make a couple bucks on it. Let me figure out exactly what that math is. WMT. Okay. So I had the 590 by 570. My break even is 588.38. So if I get it called away at 592, I'm making like $300 to $400. Let's see here. Rolling this down to, I'm going to roll this down. Okay, I'm going to roll this down to 565, get another $2 out of this, and then roll it up to 592. So that way, if it gets called away, I'm getting another $2 of credit here, rolling it out a couple of weeks, another like 30 days. Let me see if I can get this for like 210. 210. Let's try to get filled with the mid price. I'd accept like 205. I'm just going to kind of penny this down until I get filled. But it should be no less than 205, hopefully. All right, 207. So I need to update my break even in this one. So I'm rolling. Update. So rolled, collar, out. And I have now a 228 expiration, 592 sell call, and a 228 expiration, 565 buy put. I need to check the debit on my put. So 363, let me make sure that's the right fill. So the put filled for 362. Okay, so 362 debit. And I need to track the debits because the protection of the downside, if we fall, okay, if we fall on the S&P, I'm going to look to see if that put value will increase. If that put value increases, that allows me to lower the cost basis that I already have. So I collected on that trade 207. 207 credit. So that gives me a break even now of 589. Okay, let me do the math here. 589 minus 207. So 587. $587.31. And if it gets called away at 592, then I make $469 a share. So I'll make, 470 bucks. And that's if price stays above 592 by expiration. So a little roll there was needed. That's cool. All right, micro strategy. I might do the same thing on a roll. A lot of those, like I said here, the 111 trades, if I go into the Discord channel, so A1 trading, coming to some of my future trades. So ES, this is an income trade. Should be looking pretty good. I mean, I'm holding a lot of these towards expiration. If I get the sell put to be worth like 90% of profit, I might just take it. But there's a bear trap in here that I let it run, and I just want to make sure, like, if my max profit here on the credit is around $477 per contract, then I wouldn't necessarily take less than like 400 bucks. Okay, but there's plenty of downside potential plus a bear trap, which is kind of nice. We have a $3,000 profit trap if price is less than 54.75 but greater than 5,200. This trade here, silver, same thing, like a 1-1. It's a 1-1-1, but I put in a hedge. Probability of profit is pretty darn high. About a $300 trade. Same thing here on ES. So those are futures. Stocks and options have been busy. Income trade on Tesla, income trade on Apple, Palantir. CB is Chubb, that's insurance. Coinbase, Microsoft, Amazon, Micron. All these trades have been filled in the last week or so. So those are all looking pretty good. Forex trades, my dollar Swiss hit profit. I need to update that one. Commodity trades, I added SLV. That's a diagonal spread. UNG for natural gas, GLD. All right, that's about it there. And then index trades, been doing some butterflies. This is an XPX that was yesterday, closed that for profit. That one closed for profit. IWM, that's a 1-1-1 trade. Same thing. So anyway, just stuff to watch, and I'll be searching for some trades today. But I think it's a nice little pop to the upside. I'm a little skeptical of the market sustaining this run. If it does, hooray. But if it doesn't, I don't want everyone to be like surprised, because technically speaking, we have lots of resistance ahead, and it could be just a little squeeze in relief, and the market says, okay, we're going to fade. So just be on the lookout for, you can see the technicals here. SPX, if we hold that 6,000 handle and that's resistance, then we fade. If the Nasdaq or the Qs, same type of thing. Do we, push back up into like 520 or so and then have a fake out there? There's just a monster gap to fill. And I think the market is very capable of doing that. So if futures gives it back. So for example, for the rest of today, if we are not going higher, higher, higher on futures, higher, higher, higher on futures, if this market overnight going into Thursday's trading does not run higher, I just wouldn't be terribly surprised if this news candle ends up getting faded. Okay, so just a little cautious. That's all I'm saying. Okay, all right. Any other questions? So Nvidia is trading at 135. I've got a collar at 140 by 130. I think MicroStrategy is something I might look to roll right now. So while I've got you in session here, MicroStrategy, I've still got it at a 305. 305 by 245. If I were to roll this right now, I can go out another week and keep the same strikes and get another 200 bucks. Okay, now I could possibly, nope. If I rolled up $5, I have to pay for it, which I don't want to do. So I could just roll it for another $2 and go out another week and still get it called away at $300, and that brings my profit up from net profit originally was like 1,400, now it's 2,000. Now it'd be like 2,200. So if I go out an extra week, nuts. I was gonna say if I went to March, February 28th, like March 3rd, I'm gonna wait for that to get filled in, but I'm gonna go out. Let me see if I can get filled for. Let's see. Hang on a second. Let me make sure I do this correctly. So if I take the roll, I've got the 240, the 305 by 245. If I roll this, let me roll this down and up. Okay, this isn't awful. I could go to, all right, this is worth it. So I could roll the put down to 240, roll the call up to 310, get $5 of credit on the trade to lower my cost basis while also increasing my profit by another $5. So that's another kind of aggressive way to lower my cost basis on MicroStrategy, which I think I'm going to do that. This seems worth it. Let me see if I can get filled for $5 on this trade. If not, I'll take anything in like the 450 to 475 zone. But I'm going out another 30 days essentially to do it. I just need MicroStrategy to stay above 310. If there's Bitcoin resilient here, then it should be fine. I mean, we're trading at 357. My cost basis is going to be down to like let me see my cost basis here. 284. My cost basis on MicroStrategy is going to be 279. Let me see if I can get filled for like 550. I mean, 515 is the mid. I doubt it's going to fill there, but let's find out. That'd be pretty sick if it does. 515, no. 510. I'll try $5. All right, let's do a quick $5 and see if that gets filled. That's 10 cents under the mid. All right, let's go 10-cent increments here. 490. Hey, you got filled for 501. I'm keeping it. Cool. All right, so I've got that was a good trade. So 501. So I went out to March 21st, 243.10. I need to keep that in mind. So let's roll this. So roll this to March. Uh, 240 by 310. Okay, so 240 by 310 for 501. Come on, $5. Survey says. Come on, broker. I mean, you filled me at 501, man. Let's try this. 496. All right, not as good, but it's okay. And I'll just when I do this, I just take the lesser of the credits, and so when I'm calculating a break even, I'll take the least amount. So that way I know that that's the cost basis I need to be aware of, and anything beyond that, like the extra 5 cents I save on another account, is fine. And then this account has the same thing. So the 245, 305, do a quick roll, go out to March, roll this down to 240, up to 310, and hopefully $5 will fill. If not, $4.95. Be a pal, would you, Tasty? $5. Cool. Okay, so $4.96 was my lowest fill. So I'm going to update this in my tracker. Update. So new collar position, and the debit on the put 11.25. So I have a 3/21 expiration. I sold the 310 call, and I bought the 240 put, and the put cost me $11.25 debit. Again, the reason I track that is because if the price of MicroStrategy is going down, then this gains in value during the time that I have it. So if I were to see this 11.25 debit all of a sudden increase to $15, well, that allows me to lower my cost basis by $4, right? So I may not see price go all the way down to 240, but the point is, if it is going down and this debit is increasing, it does allow me to lower my cost basis, and I can continue to kind of play this collar and roll position. But the nice thing is I'm increasing my takeaway at 310, and let me update the math. So this was for it was 496 was my lowest fill. All right, so 496 credit, and that gives me an updated break even of 284.82 minus the credit, so 284.82 minus the 496 credit. So 279.86 is my break even. Okay, so if it gets called away at 310, I make $3,000, and that's on 3 accounts. So I make $9,000. I mean, that's a good income play. And yes, I'm holding it for 30 days or 45 days, but I'll take it. I think that's worth the effort to do a couple of trades, buy the shares, enjoy the volatility, get some good premium on rolls, and I'm still protecting the downside just to be on the safe side. All right. I think that's going to be one of the keys to surviving 2025 with whatever the market throws at us is I refuse to let the downside be something that's going to cost me a bunch of money and be stuck in bad positions. So I will add protection. And do I sacrifice some of the upside for it? Sure. Right. If all I did was sold covered calls, then I'm lowering my cost basis by bigger chunks and I have zero protection at the downside. But for a stock like MicroStrategy, I mean, come on, you're nuts to think that this thing's not volatile. I mean, we've had 2 big gaps to the upside, and this is another thing that could absolutely get filled, right? I mean, would anybody be surprised if we go bullish, gap, and it goes blech, and just pukes on itself and comes back to $300? I wouldn't. But if we stay greater than 310, I'm good. And I've got enough time in the trade. Like if it goes all the way down here, then that 240 put that I do have should be gaining in value, and I can lower the cost base a little bit more, and I'll just keep working on it. Okay. All right. Let's do a couple more things here, and then I'll let you go. Argentina, I'm just curious. I love a pullback into some better moving averages here. China is still green today, which is kind of a pleasant surprise. Apple making a nice little pop off these levels. Ratio spreads looking really good. Amazon gapped higher, but is red on the day. I've got an expiration for Friday. I was hoping Amazon would cling to some gains today. I might take a small loss on Amazon. I've got a bull call spread that I might take a small loss on. Google, I've got a bunch of income trades, ratio spreads. That's fine. Meta, I'm going to wait a little bit longer for some pullbacks. MicroStrategy or Microsoft, big difference. Microsoft, I've got like 3 or 4 ratio spreads and income trades on that one. I've got a nice little pop to the upside here, but again, just staggered out for a couple of trades. Netflix still waiting for a pullback. This wasn't enough. It's not enough. I want a deeper pullback on. I mean, we're down 12.5%. I want to see if we pull back into at least some type of gap here. At least some type of gap on Netflix. And I could be wishful thinking. I might not get it, but we'll see. If Netflix gets to $1,000 and splits, then I'll probably just buy and start over. Otherwise, it's ratio spreads, or we've got some 1-1-1s, things like that. Maybe what's the IV on Netflix right now? 72. That's pretty good. Let me see what I have. What do I have on Netflix right now? Nothing. I think I already took profit on it. There is no Netflix in the portfolio. Okay. So could I, would I, should I? I'm looking at a 111. So let's find out. A couple ways to trade this. I could look at an iron condor, and I think there's enough, volatility in here that maybe that does well. Doubtful though. I think I'd rather take the trade where I like Netflix enough that if we pull back into 750 or 700, I think I'm going to put in like a 111 trade where it starts here. And if I took any ownership, it'd be at like 650 or 600. Okay. So let me see what that looks like. I need to find maybe a 60-day window. So March or April is not terrible. We do have earnings in February. February 4th is earnings. Do I want to wait for earnings? Do I feel like Netflix would have like a bad earnings print? Probably not. Anyway, let's see what I can get here. So March isn't terrible. Earnings. Okay, my bad. I was on MicroStrategy. Here is Netflix January 21st, which is next week. So how much do I like this stock? 65 days out to March. And if I were to buy, let's say the 750 by 745, and then sell a 700. I kind of like that trade. I could still get $600 credit. It's going to tie up some buying power, but that's to me a pretty darn good trade. 700, like if we get filled there, I mean, I would take some ownership at 700. Now, 700 is another 17% lower. I mean, this stock can be extremely volatile. That'd be a 25% discount off the top. I guess maybe it to be on the safer side. Let me lower this a little bit more. Let me get rid of this. That's a good trade though. If I were to do, let's say the 700 by 695 and do a 650, I can still make $3 on that trade. 95% chance of profit, doesn't take up a ton of buying power for the portfolio margin accounts. I would have that's $300. It's not a bad trade. So I get $1,000 profit trap. I would take some ownership at 655. Let me do the math on this. This would actually be pretty good. So 655 would be the assignment price, minus 10, minus 287. So I'd own shares at 642. If I own shares at 642, I mean, that's well below where I think price would actually go. But let's do the numbers on percentage discount. So if it was 642, I would own shares about 32% cheaper than all-time highs. And that'd be well below the 200 moving average. I'd be okay with that. Also, it's really just initially an income trade. It's an income trade. If I wanted to, I mean, that's $1,000 profit trap. If I went here, I get more credit on the income side, but my profit trap is a little bit less. I mean, if we're going to go down, I might as well make a profit trap worth it. So let's space that out. Yeah, that's a 111. I get 280 of income out to March. I do have to absorb the earnings. If I was going to get assigned anything, if I want to put like a really, really cheap hedge on, like really cheap, let me buy this 185 times 2 times 3. So that's a protection play. That would be like if we just absolutely had a terrible, terrible earnings print. That's a pretty good hedge. And I could do that to bring my credit back up. So 655. I still like this trade. This is fine. So I'm going to sacrifice a little bit of the credit up front to have like this out of the money hedge. But I still get $237 of very probable income. I think I'm going to take the trade. And I've got a profit trap that would be close to like $1,200. So there's $1,000 there plus the credit. That's $1,200. Shows max profit of 20 grand because that would essentially be like if Netflix went to zero, then my 185 put would be worth blah blah blah, which this is unlikely. Okay. but I'm going to throw it in there just in case. It only sacrifices about 30 to 40 cents of income, but I like the trade. So hopefully I get filled here around where I want it to get filled. I would accept like 220 to 225 if I can't get filled at this mid price. So I'm going to throw this in. Okay, so Netflix 700 by 690. If I want to take the, that's another $50 a profit. That will, let's see, that I'm gonna do this one. I'm just gonna eat the $50, go after a $10 profit trap, as well as the 655 high probability profit. Ideally, step number one is just an income trade, but I like the trade. So let me see what this is here and what this is here. I mean, buying power wise, like it's a little expensive. It's like 69.50 on portfolio margin, but I like the trade enough that I'm going to take it. So there we go. 230. See if I can get filled. 278. Way freaking better. Totally not bad. All right, that's good. This trade here, 252. Way different. Well, that sucks. And then this account, let me see if I can get filled on this account, and I'll go to 280. See if it fills me at 280. 280 filling. 275. All right. Well, that sucks that one account got filled at 252 while the other ones were 278, 275. So I'll take the lesser of all of them. That'll be the trade that I post. So I'm not like, oh, look at this. I got filled for two. If you get filled at 250 or better, then I'm in the trade. But I've got a 278, 252, and 275. That's fine. And I'll add that into my tracker. I'll put that in Pulver alerts. And then I think I'm just going to comb through the portfolio. So Netflix, this is a 3/21 expiration. Buy the 700 put, sell the 690 put, and sell the 655 put. And then way out of the money, I'm buying the 185 put with 5 contracts, and that debit is going to cost me pretty much nothing, 22 cents. So I'm tracking all that. And then the total fill was 252 credit. And then I got filled for 275 and 278 for the other accounts. Let me track those accounts there. All right. So getting it ready for the post. So $2.52. So is the credit profit with a 12.52 max with profit trap, 95% probability of profit. And I'm also willing to own Netflix for repair. Okay, I would for those accounts. One account has $300,000 of buying power. One has 233,000. One has 180. I'll take the 20 to 30 grand and own the shares and repair Netflix as quickly as I can. Again, probably repairing it for maybe $2,000 to $3,000, which means I need to find a way to carve out like 20 to 30 bucks a share, which I think I can do. Okay. So I'm going to post that in Pulver alerts. That'll go into the stock option trades section of my channel. And I think I'm going to wrap it up there. So for the day, there's not really a bunch of follow through today. So we had some direction, but not a bunch. Basically, since the 5-minute move in the morning, price is right there and just chill for the day. Tomorrow's a new day. So are we going to fill this gap? Are we going to drift a little bit higher? We don't know yet. So we'll find out. Nasdaq, yep, you must have come in late because I did all that. So this is my SPX. Looking at some of this channel, here is the QQQ, same type of thing. I just think we're in a bit of a channel. It doesn't mean that I'm bearish. It just means that this market is not done correcting. The bulls would have some work to do, right? I mean, the Nasdaq, it's like, okay, by 520, if that is a rejection spot, then we drift up there and then we fade. So I could see this gap that was created today. I could see the gap getting filled. I could see the election gap getting filled on the Nasdaq, and that would be finally the last index to do it. The issue with that would be if the Nasdaq falls and fills this gap and fills the election gap, we're probably going lower on the SPY, lower on the Dow, lower on the Russell, and we're just still going to be in this kind of corrective behavior. But that's what I see. Now, I could be wrong, where the market uses this as a reason to move higher and just continues to push. If we get into open space, okay, fine. But like, I'm not super bullish, like I'm not bearish, but I just think that this market is going to say, look, we had an incredible run to all-time highs. We have now like had a reasonable correction, not crazy. Like what's the Nasdaq corrected like 7-8%, about 7.33%. The SPY corrected like 5 and 6%. So these haven't been like crazy corrections. Yeah, I mean the SPY was down like 5.5%. So these are minor corrections, right? So is there more to come? Maybe. And we just need to be aware of it. I mean, a 5% correction that's like offering to buy the dip. Okay, cool. But this market doesn't seem to be like V bottom buying the dip, right? This market seems to be excited about that support, ripping on CPI. But I think the reality is nothing really changes. So inflation is still higher. Fed is not cutting rates. The one thing I would say is going to put more pain into the market would be our yields. So here's our bond market. I mean, that's a pretty good sign that the frickin' bonds have started to do something positive for once. So that's a nice little jump. Bond market there, 10-year yield down 2.77%. It finally feels good to see some red in the yields. So that's a good sign. And if that continues to be the potential trend, then things could be looking like they're turning for the better. But the issue, of course, is that this is a one-day move, and all this does is settle back in, and all of a sudden we're going higher again, and higher again, and higher again. We're having the same conversation. But if this actually shows, promising a reversal on the yields, like let's say if the 10-year can get down to, 4.5, let's say if the 10-year can get back down to like low fours, like freaking do something different besides going up. So anyway, TBD, to be determined. Okay, Nick, I see your comment there. Had $100 on CPI news today. Stop loss slipped. What were you trading? Were you slipped in what? Slipped in Forex? Slipped in futures? I mean, trading the news and trying to have a tight stop loss is impossible. Every broker, every asset, other than trading options, there is no way to have news give you any type of fills. And the broker is going to make you responsible for whatever you get filled at because they'll say our next available liquidity spot is blah. And you can totally get slipped on stops. So you got to be careful of that stuff. That is also why I'm such a huge advocate for trading options, because the line in the sand is my price. It's not the stop loss. It's just the price. If price is above it, I can make money. If price is below it, I can make money. If I'm wrong on direction, okay, I lose, but it's calculated risk. It's the cleanest way to avoid all the choppy noise that Forex traders deal with and futures traders deal with. Stop losses are hunted all the time, because they provide liquidity to the market. So yeah, lesson learned is good, but I mean, again, if it's truly learned, then you stop putting stop losses in the way of news. All right, I'm gonna let you go for today. Thanks everybody, and I'll be back mañana. All right, thanks team. Thanks everybody. See you. Bye. Or not. Let me know when we're gonna wrap up. You guys can just cut me off when you're ready. I can do some Forex. I'm actually just going to go through the portfolio right now. This is what I typically do when I wrap up these sessions, just work my way through things. So while I'm at it, I'll just get that Netflix trade posted in Discord. And yeah, let me get the Netflix trade posted. And then, okay, so Netflix. So new trade, Netflix. Let me find that exact trade again. March 21st. Could I do a roll on OXY? Maybe. That's worth a couple of bucks. I don't know if I want to though. I'm at 500 shares of OXY. I'd like to just kind of get rid of that one. That should be worth like $1,000 right now. All right, let me get this Netflix trade posted. So Netflix. All right. So it is a March 21st expiration. Buy the 700 put, sell the 690 put, and sell the 655 put, and then buy the 185 put 5. All right, so I collected $2.56 credit or better for fill. I feel so my lowest account was 256, but I put in at 275. It got filled. 278 got filled. So hopefully you can make more than 256. Okay, this is a 111 with a way out of the money hedge. 95% probability of profit. $2.56, so 256 income. Highly likely. Just the credit. If price is less than 690 and greater than 655, that's a max profit trap for 1256 profit. And I'm willing to own shares of Netflix if price is less than 655 expiration. And that break even will be 655 minus 10 minus 2.56, 640, 642.44. Okay. And in. All right, so that's in. And Netflix. I started that trade around 700. So I'm going to put in another box here. 700 down to 655. Okay, this can be done. That was profitable already. That trade is over. There's my new trade. 321 expiration, 111 and hedge. So it's a 700 buy the 700, sell the 690, sell the 655, buy the 185, 2.56 credit. All right, so screenshot, get it posted, off we go. Okay, trades in. Nvidia, it's in between. I still think Nvidia has the wiggle room is down to the 200 moving average. I mean, I'm a way more excited buyer after this bar count is made good. There's a super high bar count here. We haven't hit the 200 moving average on the daily chart for close to 600 bars. I'll take that back. 500 bars. That's still really high. A 500 bar count on the daily is really high. So I think Nvidia. I don't know if the premiums are good enough, but part of me is like, could I sell something above 150 and down below 100? I don't know. Let's take a look at that. I have a ratio spread in. I own shares of Nvidia with a collar at 140 by 130. So there's downside protection. There's upside. You know, if it gets called away, I make like $700 or $800 a contract or share. Yeah, about per contract, whatever. But if I did like a one, let me take a look at Nvidia. Nvidia has earnings, so I probably want to stay out of that. Nvidia has earnings next week. Maybe there's a big old IV contraction here. 73.8. If I went out through earnings, that's kind of my optimum decay. Could I get above? Gosh darn it. Give me Nvidia. So earnings are in February. Okay. So I like the February 18th. If I went above 150, like the call side's not terrible. Are we going to hit new highs in NVIDIA? Probably not. I could do a 165 by 170. It's not a ton of premium. It's truly not. If I did a slightly higher delta here, like that's okay. It's okay. I don't get super stoked on it just because, I mean, for a $5 risk, I'm pulling in 58 cents. That's not great. To the downside, I mean, the 150, it's like, that's a 17 delta, but it's all the way down to the expected move. I would say the one, what am I pulling in here? 219. I mean, to get more on the call side than I do the put side. So the pricing skew on this one is the opposite of the indexes right now, which is kind of interesting. So if I did a 115 by 110, I mean, to get $1.38, it's a way to trade earnings. It's I don't know. It's like garbage. I'd risk 361 to make 139. I think the trade is fine. The nice thing too is I could also own, if I wanted to, and I wouldn't mind doing this, if I took on shares of NVIDIA, if price went through my put side, I would still use that to take profit on the bear call spread and consider taking ownership on the bull put spread. So I wouldn't necessarily turn this into a loser. I would just own the shares and repair it. Chart alarm's going off. Let me see what that is. USO crossing recent highs. Okay, we got oil going up. So truthfully, I don't mind this trade. 160 to 165 in the bull call side. That is a 18 delta. How far do we have to rip on NVIDIA? So if we went straight up on NVIDIA to new highs at 160, NVIDIA would have to go up 20% in the next 45 days. I would say improbable. You know, there's about a 18% chance that it goes through this level, give or take. I think I might take this trade. So I'm risking, I mean, if here's the nice thing too, if I take this trade, if you don't want any assignment, if you don't want to own NVIDIA, then your max risk is like $360. But the idea here is through earnings, if we have NVIDIA earnings that are really messy, we have this big IV that it's like right now, I mean, if the IV rank is lower, but we're sitting with low IV, we get to earnings, it grows, and then we see an IV contraction. And if I'm selling premium, that works in my advantage. So, I mean, to make $1.30 on this, like this actually pays better than what I've been getting on the S&P for a similar trade. So I'm going to take this trade and be willing to also take some shares of NVIDIA. I've got a ratio spread in, that's fine. But I don't mind taking this trade here for like a $1.35, $1.40, and see if we can get this out through earnings. So I'm going to go after it. $1.40. See if we can fill it for $1.40. Let's go here for $1.40. Probably won't fill, but I'm going to penny it down until it does fill. $1.40, no fill. $1.38, no fill, survey says. $1.38, not bad. Okay. Now it's down to, come on, man. $1.37, like, give me some love, would you? $1.35, $1.36, $1.36 got filled. Okay. $1.36 got filled. And $1.36 got filled. All right, cool. That trade is in. New trade on NVIDIA. So earnings, and it's an iron condor. So I'm going out to 228 expiration. Sell the 160 call. Buy the 165 call. Sell the 115 put. And buy the 110 put. Collected $1.36 credit. There's about an 82% probability of profit on the trade. And willing to own shares of NVIDIA if price falls less than 115. So I'm going to take, and again, this is something to be mindful of the trade if you want to follow this in the Pulver alerts. If price falls below, if price falls below 115, I'm willing to use this long put and close that long put out for profit and take on the shares at 115 and then repair this thing. Okay. So I'm okay doing that. If you're not okay doing that, the risk is still pretty tight. You're risking about $3.64. That's your maximum risk. So if the stock goes to zero, you're risking $364 a contract. Manageable. All right. If price stays in between these levels, then you walk away with $1.36 income in about 44 days. So it's a trade-off. That's what options is all about. But I like the setup, and I like the repair aspect. If price were to go really far down and disappoint for whatever reason, then whatever. Maybe it does, maybe it doesn't. But I would expect, and this is what I see a lot of times, I typically don't see NVIDIA make the big over expected move because it's such a hyped earnings play that it usually is like this big build up in price and premium, and it just goes boop, just like the air of the balloon just starts to deflate. And so we get like this nice IV contraction, and that $1.36, $1.40 turns out to be a nice profit for us. And if you want to take partial profit on that too, like if this $1.36 is turning into, let's say like 60 cents or less, then you can take your 50% profit, move on, and not worry about the trade. Right? Okay. Yeah. So anyway, that's in. I'll put that into Pulver alerts. I keep seeing a bunch of questions on Nasdaq. It's like we talked about all this stuff. You can do whatever you want. Okay. All I said is be cautious. Are we going to fill the gap today? Probably not. But all I'm saying is all these instruments with resistance here and a huge gap fill. I mean, would anybody be surprised? Just ask yourself, would you be surprised to see price with all these lower highs and lower lows that we've seen over the last month? Would you be surprised to see the market fill that gap and still make a lower high? I wouldn't be. I mean, if the bulls are going to make this thing rip, okay. I mean, there's some support in here, there's some support in here. But if the bulls don't show any signs of real continuation, this gap probably just gets filled in the next couple of days. But is that a trade I'm after? No, I don't care. Like I'm going to put in a hedge. I put in a hedge this morning on the SPY. I did a 590 by 570. So that's the way I'm going to trade a gap fill. If we're going to go make a lower low, I'm trading a gap fill with a bear put spread. Otherwise, I'm just going to, pick my battles and stay the heck out of the way. I mean, the way I'm looking at income is stay out of the way, take advantage of the implied volatility, and sell some premium and turn it into income. And that way I don't have to worry about like, is it going to do this and move $3 this way or $3 this way? It's like, I'm not trying to be crazy price sensitive. I'm just trying to make some consistent income. So I don't think anybody would be shocked if this filled the gap because inflation news today, it was not awesome. It's like we're still showing higher inflation. Another real test of the market is what's the 10-year going to do? Because if today's little dip in the 10-year is all of a sudden like, ooh, that's a shiny little move. If it doesn't stay there, if we go to the 10-year and over the next week, if all this 10-year is doing is finishing higher and going higher, we're right back in the same situation that we just had, which is higher inflation, higher yields, lower bonds, pressure in the equities market, dollar getting stronger, and all this was today is noise, right? So if this is going to continue to go lower, then I think the market is making a little bit more of a stance on, okay, this inflation stuff might be looking better. But I've seen a lot of, wise macro that's talking forecasts at 5 and 5.25, 5.5, and that's probably not looking great. Especially considering oil prices would be also now part of the stickiness. Oil prices have been very low for the last couple of months, like since September of last year. And now the oil prices are making a pretty meaningful run. Unless we see shelter prices coming down, which is a crazy lag in inflation, oil prices could be another add-in to like how inflation is going to get higher, how inflation is going to be steady. So anyway, I think we have to watch. All right, I'm officially going to wrap up here. So hopefully whoever's ever pull the plug in the stream does it this time. All right, I'll see you tomorrow. Thanks. Are we just hanging out by ourselves today? Where's everybody?
Thanks for watching today's A1 Trading Show. We hope you enjoyed, and we're excited for a brand new year of trading with you. If you're new, consider subscribing for daily videos and live streams all year long. Be sure to check out the description below for our latest deals and offers. 2025 is just the beginning of our best year yet. We'll see you tomorrow.